Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip looks at the deteriorating technicals for the Dow, NASDAQ, and transports. The weekly chart for the Dow Industrial Average clearly shows risk to the 200-week simple moving average at 11,672. The Dow has been above its 200-week simple moving average since November 2003. Annual support is at 10,747, with my monthly pivot at 11,847, and this week's resistance at 12,022. For the NASDAQ, I show risk to monthly support and the 200-week simple moving average at 2314 and 2293, as strength above 2,500 just could not be sustained. The weekly chart for the Dow Transports shifts to negative on a close this week below the 5-week modified moving average at 51.77. My second blip looks at NYMEX crude oil amidst the debate of true demand versus speculation. I say that crude oil is in a parabolic bubble that will eventually pop, and that oil will trade down to annual supports at 78.40 and 76.30 in the second half of 2008. The weekly chart shows an extremely overbought condition. My monthly pivot is 128.01 with weekly resistances at 139.72 and 141.61. The ultra short, ultra oil and gas iShares DUG appears to be in a bottoming pattern on its daily chart. Back on May 21st, I called a tradable bottom with weekly support at 25.41 and monthly resistance at 32.17. My third blip looks at the bear markets for emerging markets and China. The iShares Emerging Market Fund, EEM, peaked in November 2007 and is down 8.7% year to date. I show no value levels. The risk is another 20 to 25% to the downside to the 200-week simple moving average. The iShares China 25 Fund, XFXI, peaked at the end of October 2007 and is down 21.7% year to date, which is clearly in bear market territory. The August 16th low from last year is down another 16.6%. My fourth blip looks at housing and regional banking indexes, which scrape 52-week lows. The residential housing sector index, HGX, goes back 6 years, so it covers the period of the housing bubble and the popping of that bubble. It tested a new multi-year low of 116.19 on Friday. The National Association of Home Builders, NAHB, reported a record low reading of 18 in June for its housing market index. Housing starts for single-family homes declined in April to levels not seen since March 1991, when the U.S. economy was in the midst of a second quarter in a row of declining GDP. In addition, home appraisals are declining, foreclosures are on the rise, mortgage rates remain elevated as U.S. Treasury yields rise. The regional banking index, BKX, set a new multi-year low on Thursday, June 19th at 6103. The BKX is down 29.2% year to date and is 38.8% below its 200-week simple moving average, leading the bear market. The next support is the July 2002 low of 60.36, which was well before the deluge of subprime loan issuance. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.